Hey, I'm Zach McDonald, your real estate agent with Real Property Associates, and this is my Seattle real estate market update for November 2025. What's up, Seattle? It's been a busy fall so far. In the news specifically, when I think about the interest rate conversations, when I think about the layoffs, and when I think of the housing market, I think there are a lot of moving pieces right now, and I think it's important to pause and talk about this a little bit before we jump into the housing market. But before we do that, I want to say if you haven't subscribed to the channel yet and you're not following along on a regular basis, I'd encourage you to do so. We talk about the housing market every single week here on the channel. And this week, we're going to be looking back at the stats from the previous month. So we're going to be doing our monthly recap. And normally I would share a story here. What I want to do is take a few minutes to address the layoffs and interest rate conversations here briefly. Many people have been asking my thoughts about the layoffs and if I think it's going to affect the housing market. My general perspective is no. I don't think there's going to be any kind of a big dip in the housing market because of the tech layoffs. We've been through this before. We've seen large tech layoffs. We've seen industry shifts before as well. I think my overarching thoughts here is that no, we're not going to see a big drop in the market. What I do feel is that individual people are going to be very affected. There are going to be families that are going to need to sell and move, maybe even move out of the area for jobs. I think there are going to be families that are affected in the sense where they need to stop their housing search. Do I think that it's going to have a big enough effect on the housing market for it to be noticeable in any large way? At this point, I would say no, I do not think that. I don't think we're going to see a big drop in the housing market because specifically of layoffs in the tech world. Now, do I think that the interest rate environment is going to continue to affect the housing market? And I think the interest rates are the bigger thing that I'm paying attention to. I think there have been a surplus of buyers in the area that have been sitting on the sidelines. I think there are a surplus of people that live in homes that and even own homes where they haven't moved or bought something else because of the interest rates. And so I think that the market will loosen up even more. There'll be a lot more transactions. There'll be more buyers just from lower interest rates. Now, is that going to happen? We've seen a couple different Fed rate cuts. They're hovering today right around 6.34 on Mortgage News Daily's survey. They've been fluctuating between 6.15 to 6.14 here over the past month or so. The interest rates are affecting, I think, the market a lot more than layoffs have and will. And so I think if we see interest rates trend down, they have been trending down below 6, I think that's going to be really good for the housing market. I think that the markets are responding in a way that they're not confident that we're going to continue to see Fed rate cuts, and that's because they're not confident that we've got inflation under control. And if that's the case, then we probably won't see rates dropping into the upper 5s, low 6s. There was a lot of hope and optimism around that. Now there's uncertainty, and that's why we've been seeing rates hovering in this zone and not continuing to drop, even though the Fed has cut rates. And as a reminder, and I've talked about this numerous times, but the Fed rate and mortgage rates are not directly connected. The better metric for mortgage rates is to follow the 10-year Treasury. So keep an eye on that. Keep an eye on the inflation data, the jobs reports, and we'll have more of that, hopefully better data, if we get a reopening of our government. Now, let's talk about the housing market here in Seattle because that's why you're all here. And let's talk about median sales price. So big news flash here. Seattle set a new record high median sales price. And if you don't believe me, look at the data because 1,042,500 is the new high in Seattle, 8.6% above last year's number for October. This is not just an October record. This is a record in the city of Seattle in 2022. Seattle was right at 1 million. And this year, earlier in the year, Seattle bumped up almost this high, but this is now the new median sales price record in the city of Seattle. Bellevue is down, though, 9.7% year over year at 1.8 million. Bellevue did not set any records. Seattle, on the other hand, and I've been talking about this for a while, has not appreciated as quickly as some of the other suburbs. And I would say Bellevue has distinguished itself at this point from Seattle. It's not a suburb of Seattle, but Bellevue has, in much of the east side, had grown at ridiculous rates just after COVID, and Seattle did not do that. Seattle had grown before COVID at high rates, but Seattle had slowed down during and after the COVID pandemic in comparison to everywhere else. And so Seattle right now has been relatively affordable compared to a lot of the other places. People are returning to work or being asked to return to work. And those things have, I think, shifted the focus back to Seattle and some of the neighborhoods that maybe haven't seen as much attention here over the past few years. When we talk about the average percentage of list price that houses are getting, the sellers in Seattle are getting 100% of asking price at this point. And in Bellevue, 98.6% of the asking price. So there is some negotiating room in Bellevue, and Bellevue being at a higher price point, there's usually a little bit more wiggle room, especially as the market conditions have been not quite as hot here. And we were just talking about how Bellevue had and has been pushing those boundaries for one of the highest priced places in the whole entire area, whereas Seattle's median sales price is about 60% of what Bellevue's is. So it's considerably more affordable. And given some of the other conversations that we just had about Seattle, I'm not surprised to see that houses are selling around the asking price here in Seattle. And if we look at our bar graph here really quick, that's actually less than what they have been selling for over the past couple years. Seattle has been catching up to its previous record highs here over the past couple years. It's been clawing its way back from the market shift a few years back, and it seems to be responding much better than a lot of the other areas. So in the midst of the layoff conversations, Seattle is actually doing better than a lot of the other areas here so far around Seattle. Now, median days on market, this number continues to trend down. 9 days on average in Seattle, 8 days in Bellevue. So that's the middle number, right? The average is a little bit higher, 25 days on market on average. That's pulled up significantly more by all of those houses that have been taking a long time to sell. And you've probably seen some if you've been looking at Zillow or Redfin or any of the other apps and following along and seeing what's for sale in your neighborhood. There are certainly houses that are taking a while to sell, 21 days on average in Bellevue. But as I just mentioned, the median days on market is not nearly as large. It's quite a bit smaller. So you are seeing, and people are seeing, houses that are taking a while to sell, but that is not the case for every single house. That is the case for some houses, and it's not a surprise that those that take a while to sell tend to still be around, where the other ones come off the market relatively quickly. And the new listings continue to pile up. We've been seeing more and more new listings coming on the market, a lot more than we've seen over the past couple years. For the fall, we're seeing fewer than we saw earlier in the year, but the amount that we're seeing, 23.5% more new listings here in Seattle this October versus last October. And we saw a 7.8% jump in Bellevue. We are seeing a normal seasonal slowdown here in listings, as last month we had more listings considerably in both big cities here in the area. But we are seeing some of those normal seasonal trends. But as a reference, year over year, quite a bit more new listing activity. But we're also seeing more pending activity. And that's a huge thing we want to see when we're seeing more listings. Are we seeing more sales happening too? And in Seattle, we saw 4.7% more sales, 557 than we did last year. Bellevue, though, saw a drop. So Bellevue saw more listings and a drop off in the pending sales, whereas Seattle saw an increase in the amount of pending sales. In fact, Seattle's pretty much the same, even month over month, with pending sales, even though the amount of new listings dropped. Bellevue did see a drop off in that same category. All right, a couple more for you here. Closed sales, 570 in Seattle last month, 9.7% decline year over year. We saw Bellevue with a positive 4.3% at 98 closed sales. Those would have all been pending sales, though, from the previous month. So those would have been September pending sales. So not quite as good of an indicator of what's happening right now as the pending sales that we were just talking about. And where this puts us is our total number of homes for sale, right? So in any housing market, you have the buyer activity, you have the available listings, the homes for sale, you have the interest rate, market conditions, and a big part of the supply and demand is the current homes for sale. What's out there for the buyers? And right now, Seattle has 1,419 listings, 37.8% up year over year. So quite a bit more listings for sale in Seattle than the same time last year. Bellevue's got almost double, 93.6% more listings than last year, 211 listings for sale in Bellevue. With the numbers available, that puts us at a 2.8 months of supply number in Seattle and 2.6 months of supply in Bellevue. Those numbers have remained relatively flat here over the past 3 or 4 months. There's been a little up and down. Last month, the same. In both markets, though, you're still not in a buyer's market. You're not in a market that every house is selling for way below asking price. You're not in a market where sellers are desperate to sell. It's taking months and months and months to sell. There are some houses that are taking months and months to sell. There are some houses that are seeing big price drops, selling below asking price. For the most part, though, those are houses that are overpriced from the beginning. They're maybe difficult properties to sell. A lot of the best houses that are priced within the current market conditions, they're still selling relatively quickly. And as we were just talking about, right at or right around the current asking price. So as we're wrapping up this market update here today, I think we're heading into the lowest inventory season of the year. We're going to continue to see fewer and fewer listings coming on the market here in the rest of November through Thanksgiving, and especially as we head into the Christmas season here in December. So my expectation would be that the supply numbers are going to continue dwindling here in Seattle and in Bellevue and in many of the surrounding suburbs. And we're going to find ourselves in a lower inventory environment as we approach the new year. Thanks so much for tuning into this month's Seattle real estate market update. If you made it to the end and you're still watching this video, I know you got some value. So please subscribe if you haven't. If you have questions or want a dialogue about the video, please drop a comment below. And if there's any way that I can bring value to your situation as a seller or a buyer here in the greater Seattle area, I'd love to have a conversation.